What's up, guys? It's June 17th, 2025. Looks like we had a trading range and then a breakout of that trading range with 3 legs lower. Didn't trade today. I did pretty good on the overnight session last night, so I just took it easy. Tomorrow's FOMC, so be cautious of that. I'm probably not going to trade because I don't really trade during FOMC days anyways. So it's going to be a slow week for me, but and then we're off on the 19th. So yeah, not too much trading this week, I guess, but I have taken a couple trades in the overnight session, doing well right now. Quick announcement, some of you know I've changed the membership. It's going to be trade breakdowns. I'm going to talk about entries and trap traders. So if that interests you, hit the join button below. I always want to give a quick shout out to all subscribers and people in the Discord for showing some love. So yeah, let's get into it. It is hot outside today. The heat always drains me. All right, so we got the weekly chart on the left, daily chart on the right. What is it? Tuesday. So pretty bad looking candle for the bulls right now. Bulls tried to rally. They got to last week's upper third, and there's more sellers. Not the best for the bulls. Starting to look good for the bears. We're in that third leg. However you want to count. Let's start from the breakout. Leg 1, pull back leg 2, pull back leg 3. And we're starting to go more sideways. Chain range behavior, third leg, probabilities are different. Right before we got into this, right before I started this breakdown, I was in a trade. I had an order set right here because this bar was on its high, and about the last second, this bar started to sell off, so I canceled my order. And the next bar just would have stopped me out, so I avoided a loss there. That's nice. So yeah, I'm trying to be a little more picky with my trades and make sure that dynamic for trap traders is always there. The markets are generally 50-50, but when one side is trapped, that can fuel the markets for a brief amount of time and give us that 60-40 direction. So not looking good for the bears, or excuse me, not looking good for the bulls right now. We're testing the breakout point from earlier this year. What is it? February. See that right there, and now we're starting to sell. Last time we were at this point, there were more sellers, and that led to a really big sell-off. I'm not suggesting that we're going to get a very big sell-off, but I do think there are more sellers up here than buyers. I think there are more buyers down here than sellers. That's where the market broke out last. From this swing here, breaks out, and we've been pulling back. Could argue there's going to be buyers. Did I say sellers? I think there's going to be more buyers down here, buyers and buyers. So yeah, daily chart. We're going to just talk about this bull channel because I've been counting the same legs for like months now. So we're in a bull channel. I'm looking at this price action right there. We have a leg 1, pull back, leg 2, pull back, leg 3. And the reason I count like that, I was just looking at new highs. So, and the third leg hasn't really made a new high. So this is a lower high for the bears. I always got to double check when I say that. I don't know how long it's going to take me to just get that off the cuff. I always think twice. This is a lower high for the bears. That's good for them. Bears price action. Today's bar is a bear bar. And the overnight session is trying to get follow through. Bulls want to be able to buy at the EMA again and cause a new rally, but there's a lot of selling pressure in that third leg. Chain range for a long time. Could be more buyers. I think the momentum's starting to favor the bears, but we'll see what happens. Let's see where 1R is for the bears. So bears that shorted here are looking for at least 1R, and if they make that in a quick fashion, they're going to go for that. They're going to go for 2R. Talk about the dynamic of trap traders. Front running bears are shorting here. Bulls are going to be buying right around this swing or this swing. And if this bar traps bulls when the price comes back to the original entry, or they can average in, they're going to sell out, and that's going to create selling pressure. So that could be bears shorting, bulls shorting, and then us second leg traders, leg 1, pull back leg 2. For the bulls, not looking very good right now in terms of, is this the June 17th bar going to get second leg? So we can put this fibs here, put it at the bottom of the spike. So bulls want to see if they can get a second leg 1, pull back leg 2. Problem with this is we're already past the 50% mark. So bulls bought down here. They made money. They're looking for that pullback so they can add to their position. Bears got trapped shorting here. They shorted more up here. This blue line is their new entry price, and bears are now making money. And then you can see at this moment in time, this bar is still forming. You have 20 hours left for this bar to form, but at this moment in time, bears are making money. Bulls want this to be a pullback for the leg 2, and then second leg traders can buy here and rally back to the swing high of this bar. So it'll be interesting to see what happens, because for this dynamic to take place, bears have to buy back shorts, and right now they're making money. They shorted here, they shorted here. This is their average price, and they're in profits. So we'll see what happens for the bears or the bulls. Like this. Setting up a trade here. Okay. Big gap down. Usually when we have a big gap down, we can see a tradable leg within the first hour, and then sideways price action. Today, well, we do need a way to define what a big gap down is. So that is something that's going to make today a little bit tricky. 20 points. Yesterday we had a big gap up. Okay, so just in comparison, if we call this a big gap down, that would make yesterday extremely big. If we call yesterday a big gap up, today is 1/4 of yesterday's gap up, so it's not that big of a gap down. So that expectancy for big gap down tradable leg is not existing right now, because just comparing these 2 days, this can't be a big gap down and this can't be a big gap up. It has to be one or the other. So if this is a big gap up, because it is, we just measured it's 80 points, then a 20-point gap down is a big. So that big gap tradable leg in the first hour, sideways price action dynamic, is not present today because it's not a big gap down. We do have a gap down though above support, and then we have a gap down, so that's bearish momentum, and we're above support, so that's bullish momentum, which could explain why we went sideways. Bar 1, trading range bar, sellers at highs, buyers at lows. Bar 2 is a bull bar, follow through. However, there's a lot of overlap. The follow through is not above bar 1. It's just 2 bull bars in a row. Bar 3, bear bar closing on its low. Now look at bar 4. This is interesting. One of the very first systems I built just to test myself in the beginning of last year now was a breakout mode system. And breakout mode is when there's a reversal above and below bar 1. This is not a traditional breakout mode because the reversal is on bar 1. So you could say, if on a smaller time frame, there's a bar 1 right here, a reversal here, and a reversal down here. So that's breakout mode. That's a breakout mode pattern right around here. And then the market does rally that way. So buying this for a swing up into the 𝐬𝐸 is not a bad trade. It's not my trade, but I'm just pointing that out. Obviously the whole market agreed that price should go to not the whole market. The bulls agreed price should go to the 𝐬𝐸, and they were right at this moment in time. So bar 4, you can buy it for a chance of swing up with a stop here. If you're gonna buy that swing, you got to go for at least 2R with a 1R stop. Whenever you swing, you have to have more profits than you have to have a bigger R. You have to have a bigger target than a stop loss. If you're scalping, you can go for 1-to-1, but you have to be right more than you lose. So breakout mode, bar 4, okay for a swing. Bar 5, rallies, sells off. Again, lots of overlap, trading range of behavior, gap down. So there's bearish momentum, there's support down here. Was that bar 5? Bar 6, sells off and rallies. Inside bar, tough buy. Bar 7, rallies and sells off. I like bar 7 because it's a 50% pullback from right around here. Depending on how you measure it, here or the high of 7, you're gonna get filled and you're gonna make your scalp 8 and 9 very fast. One of my trades just set up on NASDAQ, but I'm skeptical about it, so we'll wait to see how it closes. Bar 10, bar 9, bull bar closing on its high. Bar 10, bear bar closing on its low. 2-bar reversal. Bears want a second leg down from the gap down. That's where the momentum is. And then they get followed through bar 11. Bar 12 becomes a pullback. 13 rallies into the 𝐬𝐸 and sells off. So we know bears are selling at the 𝐬𝐸. Touched the 𝐬𝐸 here, sold off. Touched the 𝐬𝐸 on, was that 11, sold off. Tail on 12, tail on 13. So we know there's sellers at the 𝐬𝐸 right now. 13 to 14, there's a bear leg down, but it closes above its high. So leg 1, pullback leg 2, fractal. 15, bear bar closing on its low. Bear bar not going far past 14's low, so not the best momentum. 16 bull bar. So now we're entering that third leg. Leg 1, pull back, leg 2, pull back, leg 3. And look what happens. We rallied, trading range behavior in leg 3s. Bar 19, bull bar closing out high. Bar 20, follow through. Bar 21 looks good. Again, I didn't trade today, but whenever I don't trade, I don't ignore the markets. I just sit here and measure out trades I would have taken. This is a trade that might have stopped me out because I would try and reset the leg count and look for a quick scalp back up. Looking back at it now, I did avoid a loss by not trading. This is also a wedge top with a gap down. So bears want to sell off. They see this as a wedge top bear flag. It's a broad bull channel. Bulls are making money. Bears are making money. Then we have 22. Bear bar sells off below the EMA but rallies. So there were more buyers above bar 19. We're the trap traders. Right now, bears are trapped down here, so they're going to average in and get out at their break-even price. Their break-even price is this line, but then bears make money because it goes all the way back down to the original entry 24. It even goes a tick or two past the original entry 24, 25. So this is not a good bull leg. And then look at the leg up. So if this guy's on the second leg, leg 1, pull back, leg 2. That was sloppy, excuse me. Leg 1, pull back, leg 2. This is not a good bull leg. Bears made money on the way down. If bears are buying back shorts, they bought their shorts back for a profit. So they're not really trapped. However, on the flip side, now bulls are trapped. I just missed the trade, but I didn't think the setup was good. So that's kind of my goal going forward, is just the setup's not A1 Perico, skip it. That would have been a winner. So I wanted to scalp the high of this bar. This bar made 1R. This bar tagged it and exited very quickly. But I'm trying to be more picky, and I didn't like the close because there's just too many sellers. However, the next trade I'm going to look for is going to be a channel. Whoa, wow. Breaking out. So whenever this bar, oh man, I might not get filled for a long time. Looking for 3 bars, looking for a bear channel. Bulls, bears, what am I saying? Excuse me. Bears are now trapped down here, so they're going to try and average in. Then again, I'm going to get in at that 50% mark and go for a scalp up. That's the trade, and that's exactly what I'm talking about right now on the breakdown. So bears are trapped. They short here. They make money. Now who's trapped? Bulls that bought up here are trapped. They're going to buy lower. So the bulls buy the 21 high. We know that because there's a tick up there. And then they start to average in around 24, 25, 26. Their average price is this blue line right here. You guys can see it. Problem with this is same situation. It's a trading range. So when bears sell high, they're making money. When bulls buy low, they're making money. This bar, this rally up here, it's weak. Has multiple legs up. Leg 1, pull back. Leg 2, deep pullback, breaking the 32 low. Rallies, pull back, and then a double top higher low from here. And that's the problem, is this rally for the bulls didn't come back to the original entry. So if we're comparing the bears that shorted here and shorted here, got back to the original entry. Bulls that bought here, bought more lower, not get back to the original entry. Bear pressure is stronger. Let me know in the comments if you get what I just did. It's important to just understand how to gauge strength in a certain way. That's not to say that 37 could have very well broke out, but bears are making money. Bulls are trapped and they never got back to the original entry, so they only made money on their second entry. 37. If bears that short here have very small risk, they can put their stop here, they can put their stop here. They make multiple R's very quickly, bar 39. And now we do have a gap. Get good follow through 39, 40, 41, and 42. No gaps, but we do know bulls are trapped. They're trying to buy the low of 36. They're trapped. That was support. Now we can see that we can measure from 42 to right around here. A couple ways to measure. You can measure here, the start of the strong bear bar, or you can measure the high. If it's a prolonged channel, I usually do the start of the strongest bar right around here, or you can do where bulls bought the high. There's a rally on 40, so you can put the start of the fibs here, and then bulls bought more on 42, so you can put that here. any way you measure it, you want to get filled. So this is a good breakout. It doesn't pull back to the 50% level. Trapping bulls. 41 is that first pullback, and you could market order short 41, or excuse me, 43. This bar is that first pullback. You could short that, and you would be in profits quite quickly. Only drawdown you would have is bar 45. Let's measure 1R. See, 1R was met here, and it took 2 legs. Remember, a long time ago I talked about if you're looking for some sort of a measurement. Excuse me, I'm looking at I'm deciding right now if I want to take this trade, but I would take it from a different angle. I'd take it like this and just be a little more conservative. I think I am going to take that trade, to be honest with you. Big bars can pull back right away, so sometimes they don't need follow through. $163 a little too much risk to ruin, so I go for 2. Yeah, that's a alright trade. So what I'm looking for, bears to come back right around here, because there's a tail here. They're going to buy back shorts and then rally right into my target. We'll see what happens. So what I was saying is when we see a strong breakout, like so this is a leg 1, the target can be met within 2 legs. So 1, 2, 3, 4, 5. So if we get short around here, our target should be hit within 2 legs and about 10 to 11 bars. Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 bars. Did we count the pullback? 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5. Depending on the pullback. So that math lines up because it's double the bars of the first channel and it took 2 legs. So structurally, I really like this trade. Leg counting perspective, I really like that trade. Leg 1, pull back leg 2, pull back leg 3. Delete this. Again, this is a trade I would miss because I'm only trading with limit orders, but I did size this one up earlier today and I would have got filled on this one. Problem with this one is I'm trading into that third leg, but there was enough bearish momentum from 45 to the low of 49, so I would have got filled within 2 bars anyways. Well, I would have got filled here, so within 3 bars I would have got filled my target. 45, 46, 47 creates a gap. We know bulls are not trapped. Look where the gaps line up, right around the 42 low. We know that's support. And then we have another gap here. Again, gaps are happening at support and resistance because that's where limit order traders are at. We need trap traders to fuel a trend. That's why gaps happen at support and resistance. Look at the 47 low. The swings right here. That's support. There's buyers all right here, but it breaks out 48. The people that bought here, they're going to buy more at the, well, they bought more here on the 49 low. Do that. Put that entry here. They buy more here. This is their average price, and they make money. Get out on their first entry. So they actually make money, just kind of like this situation. The bears made money. They made money. Bulls don't make money in a bear trend, so this is not the best bear trend because they're already making money. They're like behavior. Sells off 50, 51, 52. I measured this differently because this isn't a trade I'm going to take. I'm just looking to see when did bulls make money. Bulls that had a limit order in this gap bought more here, and they made money pretty quickly. Again, the trade I would take would be this trade. There's another gap now, 50, 51, 52. And another gap, 51, 52, 53. This is the biggest gap in the third leg. So that can mean we're coming to a climactic price action when we have a big gap in the third leg. Be cautious. It's deceiving because you could think, oh, there are more trap traders. The trend's going to keep going. But in reality is, if we have a gap in the third leg that's bigger than all the other gaps, that's because also 52 is a big bar. So that's showing you signs of exhaustion. And there was enough bearish momentum to get one more leg down. Don't know if I would take this trade because it's the third leg, but let's say I did. I would be filled on 54, exit on 55. 2 bars, that's what I like to see, filled and exited. Then we go sideways for the rest of the day. Lots of overlap. And still bearish momentum, but the market has gone down for more than 3 legs, so we're in trading range. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4, pull back leg 5, pull back leg 6. I don't like to count legs past leg 6, or excuse me, past leg 3, but there's a leg here, there's a leg here. Look at the closes. Look how many bars it took to get down here. 1, 2, 3, 4, and it has a lot of overlap. So we know that the bulls are getting trapped. They're going to buy more lower. Bears are going to sell higher. 63 has a tail, rallies into the EMA. Leg 1, pull back leg 2. Don't think I would take that trade, but I did like draw the fibs, and it would work for leg 1, pull back leg 2 for the bulls. See, low at 63, high at 66, filled on 68, exit on 69. Again, another 2-bar trade. I think those are the best trades. And then we go sideways for the rest of the day. This trade's looking tough because, it's rallying. But now, rather than taking the I1R trade, I'll be taking a microchannel trade, which I like, 50% entries. Depending on how this risk is looking, I may only take one contract. Put that right there. Yeah, it's going to be probably a 1 contract trade. So look, real quick, I've been talking. This is exactly what I'm doing in the members videos. If you guys have signed up, you guys are already knowing how the new flow is going. Some of you have messaged me saying you prefer these anyway, so that's great. Bears are trapped here. Bears are shorting up here. The bears break even price is right around here. That's where my order is at. I do 1 tick above. Yeah, so that's about 1 tick above. Don't be too picky. So when price comes back here, bears are going to buy back shorts, and that's going to cause a rally into that second leg, and that's what I'm looking to catch. Depending on how long it takes me to get filled. So what I'm saying is, if I can count 3 bear legs down, leg 1, pull back leg 2, pull back leg 3, and I get filled on that 3rd leg, that's a wedge bottom and a bull flag. I may extend my target to go here. But that's all dependent on how I get filled. And right now, the bulls can just keep rallying without me anyways. So, hope you guys had a good one. Hope you guys learned something. It's going to be a short week. Tomorrow's FOMC. We're off on Thursday. I don't think there's going to be a review on Thursday because I'm going to trade the overnight session tomorrow to clock a day in for Thursday. And I'll get back to you guys on Friday. So, FOMC tomorrow, breakdown tomorrow, none on Thursday, and then we're going to get cracking on Friday. And then once this month is over, we got 1 more week. We're halfway done with the year, guys. So, hope you guys are learning a lot. Let me know how I can help you. If you learned something, share your show. Don't be a hoe, and I'll talk to you guys tomorrow. Thank you for your time. Bye.